Like back in the days, you would have called your broker and tell him, buy me Apple above 110 and not above 110.23, right?
Yeah.
So the 110 became a major. Hey guys, welcome to another episode of A Trader Over the Shoulder. Like always, Alex, the youngest.
Back from holiday.
Yeah. So we got a great episode for today. But if in case you missed the previous one, go ahead and watch them as well. We talked about trade management, risk management, strategies. What else? We started from
Trading for a living. How do you start trading for a living? So many, all the basics and all the fundamental things for a newbie trader, I think we went over.
So go ahead and check them out. Either on YouTube, you can see us sitting on a nice sofa, or you can listen on Spotify, Apple, Google, I guess, and all of those social medias, podcasters.
That's it.
Yeah.
A trader over shoulder.
Here you go.
I can't believe, actually, before we continue, I can't believe you did the podcast that I wanted to do the most.
I know.
And you did that. They actually did that when I was away. So it's like they did that. I don't know if they did that on purpose.
Definitely on purpose.
Definitely on purpose. But I'm going to have to listen to that back as well, because I think the trade management is the most important thing with trading, isn't it? So
it is for maybe a little bit of an advanced trader, right? Because as soon as you start trading, you can start trading just with a, take profit stop loss. Yeah. But as soon as you get in more advanced, then you really want to manage the trade.
There's a problem with that I see with a lot of people, especially actually with me as well. I get kind of like itchy fingers when I'm watching a trade and it's going my way.
Right.
For some reason, I've got a thing that I want to start messing with it. I want to, start moving my stop to break even, or, start.
Yeah, that's the problem.
Yeah. So that's what you talked about last week.
Yeah, exactly.
Okay.
We know when to do it.
That's it.
I mean, if you're enjoying in Vegas, at least we're
enjoying as well. That's fair enough. What's up?
What we going to talk about today?
I actually wanted you to take me, but also everybody through your process of your strategies from when you first started to the way it's developed and where it's actually at now. I know we touched on it a little bit in different podcasts, but we didn't really go in depth of what was your first strategy, how you found that first strategy, to then where you've taken it now. And then I'll say a little bit about where I've taken mine and what I'm trying to develop as well. But tell us first about your first strategy, because I know you studied for quite a long time before you actually started trading.
Yeah.
So what was your first strategy, if you could break it down?
Right. So I guess first, you start as a trader or as someone who wants to become a trader, and then you go through a huge path of a long-ass path of becoming a real trader, right?
Yeah.
And this is a roller coaster. You're going up and down, breaking new lows, reaching new highs. It's a crazy roller coaster as a trader. And obviously, you change as a person because time passed by, right? You start at 20 or 20. I started at 24.
Yeah.
So you start at 24, and then, you're a young person, you like to hang out, whatever. But as you reach in the 30s and 40 right now.
Children,
children and all of that. So
wives.
You're changing, you're consistently changing as a person as well.
Yeah.
And also as a trader, you're becoming more self-aware. You're becoming more relaxed in your trading, more patient and all of that. Right? So the strategy changes as well.
Yeah.
Because when I first started, I traded mostly momentum strategies. I developed a system after probably 8 months in the game.
Wow.
Developed because
so 8 months is quite a long. So when I first got into trading, it was like, okay, YouTube, EMAs, crossovers. Yeah, that's what I'm got. That's my strategy now. So you actually took that further and you built something for 8 months.
Yeah, because again, I started. I learned for an hour, a year and a half, or maybe even 2 years before I actually execute the first trade that I took. So I knew what I need to do. I just didn't have the experience. So I just sat in front of the computer, more hours watching the charts. And then I started building crafting the strategy. So what I did is basically went to the daily chart, took in stocks, the round number. Also in indices, the round number is very, important.
Everybody's looking at it. Yeah.
So like back in the days, you would have called your broker and tell him, buy me Apple above 110 and not above 110.23, right?
Yeah.
So the 110 became a major level, psychology and all of that. And then the algos just running and playing with those numbers. So I went to the daily chart and I call this strategy one shot, one kill. Because it was really like getting in, getting out super fast. It was 1-to-1 ratio. So I risk 20 cents to get 20 cents. But I managed the trade just a little bit. I tried to trailing stop it. So to get like 23 cents, to get 40 cents and all of that instead of really 1-to-1. I had the success rate that I had is between 72 to 73.
Insane.
Like for at least 3 or 4 years.
Wow.
Yeah, that was super great. I actually sent every Sunday. I sent to my guys that wanna follow me or whatever. I sent them a list of the stocks that I'm gonna trade.
Nice.
So ABC above $72, Apple above 105 or whatever. So I actually had a nice list before, and I just just entered above the round number, a cent above the round number, 20 cents below was my stop loss, 20 cents above was my not take profit because I moved my stop losses, but yeah.
And you'd get your bias off the daily, and then you would go into a lower time frame to get your entry, or how would you?
The entry was the same because it's a price. It's not, $72, so it doesn't matter if you look at the hourly chart. It's still $72.
So you're just getting that point, $72, and then
because the level of the round number was the case. So if we go in a little bit into the details, the rules. So it had to have 2 touches, either cross it by a tail or just close and open below the 72. So for example, if you imagine that you have one time, let's say 6 months ago, it touched the 72 with a tail, right? Then 6 months later, it touched it again. And then the third time,
that's when you're buying
reaching the level I'm entering. Yeah. So there's all, a lot of rules around it, but pretty simple strategy. And the numbers were great. But since it was a 1-to-1 ratio, I didn't make a lot of money on that, right? Because at the end, I was taking like 23 or 24 or 40 cents in profit. But yeah, it was profitable, but not like crazy profit.
Where did you find that strategy, or did you just make that strategy up by looking in the chart for a long time?
Yeah, definitely. Just looking at the charts, watching every day, hours and hours and hours, just understanding the psychology of the price, the psychology of human behavior when they looking for the round number, and then you see, okay, you touched it here, touched another one here, the third time you break through it. And then I started to, just building the setups or building the patterns, just categorize them, right? So if it was 2 touches and the third one, that was, don't really remember, but let's say B+. But if it was 3 touches and this is the 4th time we're reaching that level, this is better, right? Yeah,
stronger. Let's say if it's a stronger level, you have 3 for 4 touches, then the opposite side, it's going to be...
Yeah, because it's like thinking of a wall. If you take an hammer, right, and you smash it in the wall. So the first time it's just a crack. The second time is breaking some.
It's actually a little bit how some of my trades, a little bit about the strategy that I use is quite similar, because I wait to see if a level has been touched multiple times, break through that level, and then I get into the trade on the retest of that level. Okay. So
Yeah.
that's where I would get in.
It's a good.
I'd be. I've normally seen, especially when I'm trading crypto as well, that sometimes it will break a level and then go straight back down. It's like taking all of that liquidity, taking everybody's stops, and then just go straight back down. So that's
Like
why I wait
false
for
break,
basically a false break.
But the thing is, since you're looking at or taking the trade from the daily chart,
Yeah.
then this false break is actually my profit intraday.
Yeah.
Because the tail, the false break of
That was
the
where
tail,
you got in and
this
then
is
where
my
you got
money.
out. Yeah. Interesting.
Exactly. So you're counting on the daily because there's a lot of people, much more people watching the daily and trading the daily chart, and then you're just taking your profit intraday.
Nice. And you used that specific strategy for 3 years, or did you have other strategies that you would use as well on
I
top
traded
of
also, like pullbacks and other stuff like that, VWAP pullbacks, for example. But for some reason, it was my main, definitely 70% of my trading.
that? Wow. Yeah. And what made you want to change from that then? When did you get to the point where it was like, okay, I've had enough of this?
I mean, you just change as a person, like I said. I wanted to be better, manage the trade, because in those days I didn't really manage the trade beside moving my stop losses or trailing stop. So I wanted to play, let's say, a little bit more. I understood more the chart and trading process, so I wanted to be a little bit more involved in it, taking more profit, not just one-to-one and stuff like that. But to be honest, I can easily say, maybe you can guys go ahead and check me out, but on this one, but probably still working till this day.
Yeah. Well, like I said, it's like a variation from what you said is, that's something that I kind of use similar kind of techniques as well, or similar things that I look for before I get into a trade, is if a level's been hit multiple times, then it breaks through and retests that level, and that's where I get in.
Yeah. I guess this was the base of building the strategy that I've been using since then. The counter trend strategy. Since I already understood how levels work and the breakthrough or the false break. From that point, just.
So for somebody who doesn't know what a counter trend strategy is, it's basically you're looking for a reversal in the price action.
Yeah.
Yeah.
So first you need to see a strong momentum move to the upside or the downside, and then you take the opposite direction. Basically buying the bottom or selling the top.
And when did you actually start going into that then? So you went from the first strategy you're using for a few years. You've always been an intraday trader though. You've never been
from day one.
From day one.
Yeah.
Why?
First, you can sleep at night easily.
You
closed all your position. It doesn't matter. You made money or lose money. At the end, you're not open to the market.
So you would always, no matter what, close it at the end of the day. Really?
Of my trades,
Even if your trade was, it was shooting up towards you take profit and you just was like, I'm going to let this trade run. You'd never do that. You'd just be like, that's it, I'm closing.
I didn't have a lot of those.
Okay.
But if I reached like 5-10 minutes at the end of the closing bell,
That's
definitely take my profit and get
Interesting.
out. Yeah. That also changed in time, and I got like 10 or maybe 20% of the trades that afterwards I made that I kept going for another day or kept going for another day or two. But definitely day trading. It's more interesting to me. I don't like swing trading. I can be good at it, but I don't really like them. Not finding any interest in it.
It's not, you don't enjoy doing swing trades.
Because you just buy it, and now you need to wait for hours or days, and you're not really feeling the trade. You're not really involved. You're not active. So
you like having hands-on in front of the charts, managing it, being a real hands-on trader. That's all the fun in it, though, I guess. Yeah, exactly. That's what I like as well.
I mean, you see the chart moving in front of you, either against you or to your favor, but at the end, you're watching the charts. And this is something that I love to do from the beginning till this day, you know.
Something quite addictive, in my opinion. I love watching the charts as well.
I always look at it as like a computer game.
Yeah.
So you want to be involved in the computer game.
When did you start going from a daily, looking just at the daily, to start looking down into, because you usually sometimes look at like 30-second charts or even less, 5-second charts.
I love the 5-second chart.
Never looked into a chart on a 5-second before.
You can see so much information in 5 seconds.
Wow.
This is why I don't use level 2, for example, because 5 seconds, it's literally, if you like level 2, just go to the 5 second, you will see the same, you will have the same result. You will see the same thing going on. Even better on the 5 second, because you actually see the price.
Explain to people what a level 2 is, so they know what level 2
is. Basically the market depth. It's the book where you see all the limit orders waiting to get filled, right?
Yeah.
Buyers and sellers.
On each side, so you get to see the buyers on one side, the sellers on one side, the volume. You get to see a lot more information than just looking at just a normal candlestick chart.
Although it's not ordered that executed. So
isn't it? Is it like market?
Like pending.
So
it's not market. It's just limit orders.
Yeah.
So when you're looking at it, it's actually kind of fake, because
they can spoof it.
Yeah, like spoofing. They can delete their orders. They can, use hidden orders or iceberg orders, stuff that you won't really. You will see 100 shares want to buy at a certain level, but it's actually 2 million shares, because they presented only 100 shares, right?
So it can be manipulated quite easily.
Definitely. So on a 5 second, for example, you consider the execution, and you see all the tiny levels that you can actually work with and understand. Okay, if it will break that level, I can add and scale into my position. Or if it will break this level, I can actually scale out of my position, or averaging down, or whatever is your thing. But at the end, on a 5 second, you see a lot of information.
That's crazy. I just find that absolutely insane, because you've got to be so fast. You've got to take in so much information in seconds. It's like. It must have taken you time to get used to a 5-second chart, then, no? Yeah,
but when you're watching the 1 minute chart every day, all day long, you're getting used to it. This is what you do.
And your counter trend trading, you started then obviously using Did you first off in your first strategy? Did you use any indicators, or is it just price action?
No, the just price action. No, just price action, daily chart. Sometimes weekly chart, finding levels, strong levels, like round number, but very strong one on the weekly chart, but mostly daily. And just playing the price action, understanding how price reached that resistance level, right? Because sometimes the price will bounce off from, let's say, 50 to 60 in just 2 candles, right? So you don't really want to take the break, because it's already extended. And sometimes it will reach it and get a little bit faded, and then. Would you prefer,
if you're, let's say you're about to sell or buy a level, you prefer price to actually go there slowly, or would you prefer it to go there so slowly then faster?
In this case, the one shot one kill strategy, definitely. You want to see a low volume, all of that. So you don't want to see excitement before the actually breaking of the round number.
And if it was the opposite way around, you'd maybe look at that as like a fake out or something like that.
Yeah, 100%. Yeah.
And then from there, you went into what's the next strategy?
Between those strategies, I had, all the good stuff, the pullbacks and, the flags. I used to trade a lot of flags.
Yeah, flags are fun to trade.
Yeah, definitely. Also a momentum strategy. Flag. But I don't know. I feel like I can first read much easier the counter trend. I can understand it more clearly.
Yeah.
I can understand who is
participating in the market.
Participants, They're actually moving the price and manipulating the price. And this is why I call that strategy smart money manipulation. Because it's literally the smart money manipulating the price in order to get you in the trade.
Every time I see it all the time where, prices gone really fast through a level on low volume. And then I'm just like, there's people buying this level right now and they're buying it and I know they're going to get absolutely destroyed. And the next, 15 minutes, bang, straight, the whole candle has just been taken in just one candle. It's like, it's kind of fun actually just watching it as well. Sometimes you can get in, get out, but sometimes being on the side is actually good to be watching it.
Definitely spend time just sitting in front of the charts and observing and, watching it. So before we'll get to that, tell me a little bit about your, the guys that listening. Cause
for the crypto stuff, so I first started with a strategy that I'd look on a daily chart and I'd look for price to, like a W or like a double bottom or something like that, where basically it's tried to get through a resistance level but couldn't. And then I'd go down to, let's say, like a 1 hour or 15 minute, and then I'd try to get into, let's say, a buy if it was at a resistance level.
Okay. That was your first strategy, right?
I say my first strategy because the problem I've had with quite a lot, I've got so many different techniques that I use. I haven't actually got a specific strategy that I've got. Like you had these rules, these hardcore rules, and you wouldn't take it unless it's that, like they hit those rules,
Yeah.
Whereas me, I've got these techniques where I'd look at it, and if I know that pattern, I'll take the trade,
What does it mean, know that pattern?
If I've seen that pattern a lot, let's say a double bottom or a flag pattern, let's say price has gone up and then it's starting to make a retracement on low volume, and I'm looking at market structure and I feel, okay, that's like the typical flag pattern,
right.
Then I'd actually get into a buy position if it's going up, and that's where I'd look at market structure a little bit to put my take profits on top of that. So I call them techniques because I don't have really like hard rules, but I've been watching the charts for so long, you kind of understand reoccurring patterns that happen quite a lot. So my first strategy was seeing like a double top or a double bottom, then I'd go into a lower term time frame, and then I would just see if I could get into on a retrace or a continuation or something like that.
Okay, but you didn't have any like
hardcore rules? Nah.
Because a flag. Okay, you know how a flag look like, right? Or
so maybe
button, but
subconsciously I do. Like subconsciously, what I would want to see is on the retrace. I want to see a lower volume. So lower volume on the. Right. Let's say it's going up. On a small retrace, I want to see lower volume. I don't want to see suddenly high volume of sellers coming into the market, because
if you see a high volume?
I don't get in.
You don't get in?
I don't get in.
So that's a rule.
Yeah, maybe I do have rules. I just don't, I haven't got them written down. Like, a lot of traders have these hardcore written down rules. I've just got things that I know in the back of my head to always look out for before I'm actually taking a trade.
Like a discretionary trading.
Yeah, probably. I prefer that way because I've never been too good with rules in anything. So when I have rules, sometimes you can bend them a little bit. So I prefer having a roughly what I'm looking for, and then take the trade on. Obviously, if I feel like this is a good trade, or I feel like this is working in the context of what is going on.
Yeah. I got you. Yeah, definitely. So when I started, I had those very specific and strict rules, super robotic, But as I continue along, I actually changed to, again,
more discretionary,
more trader, more discretionary,
I think the hardest thing was a newer trader, when you're first coming in, you're bombarded with so many different strategies, so many things like off YouTube, or so many things that people are telling you to do, and you do try a lot of things, but I feel like the best way to actually learn, as you said, is actually just looking at the chart and seeing what price action actually does, and you eventually start to get a good feel of kind of, I would say, the personality of the chart or the personality of that asset. You get a good feel about what's going to happen, and you see it so many times. Eventually, you kind of build that, as you say, playbook in your head. That's the kind of techniques or the kind of strategies you use.
Yeah. The only thing I would add here is, as soon as you got it in your head, try to put it on paper as well.
So try to write it down.
Yeah. So you will have the idea, and you will have, you will start looking at, the thing that you want to buy a car, a new car, for example, right? And you go out thinking of, let's say, just for the sake of it, a BMW Series 3.
Okay, it's a nice car.
Yeah. So you go outside, you start driving, and all of a sudden you're watching, and just on the road you will see lots of BMW Series 3. For all of a sudden.
Because you're paying attention to it.
Exactly. So if you write it down, you will have more focus, and you will be, into it more. You will understand and find it better and more. See what I'm saying?
Yeah.
So just take what you
take it in my head and just put it down onto paper. So yeah, that's really when you start off. We had loads of these little techniques, and now what I look for, especially in the crypto market, is like where it gets to a certain swing position or a certain level, and I do look for those fake outs or those like fake breakouts where price takes that kind of liquidity and then goes back the opposite direction. Because I do look at level 2. I look at something called exo charts, which you can see market participants, where they're actually going in and how much volume there is into one candle. And it really gives you a good idea of what's actually happening, other than just seeing like let's say a 15-minute candle or a 5-minute candle. It gives you a lot more information about what is actually going on. And especially if there's a lot of people trying to get price up to that area and then they're just totally destroying it back down to the opposite direction, I like to ride that down to at least like the next level.
Okay.
I'll have to show you though. I want to get Miki into crypto so bad. What was the trade that we did on? We did a trade on Luna. Yeah. So Luna, first trade on crypto. It was fantastic though. Yeah, I think
it's like 1,000. I don't know, like 800%.
Yeah, it was. So Luna absolutely crashed. If anybody's into crypto, they would see what happened to Luna, I think, a couple of weeks ago, and I was in disbelief. But it got down to about $1, and I said to you that I wanted to get in, and then it got to $1. I was like, nah, this is too risky. I'm not getting in. You were like, stop being a stop being a wussy or whatever, and just get in. And then suddenly the whole office starts buying, and I think we got in at $1. You got out around. You're around 6. And I had some orders around 3, around 4, and we got out at like gradually up. But that was incredible. That was a good first couple of trades, and that was.
It was fun.
Yeah, that was fun.
The
office was cool. That was really cool. But I can't believe what happened to. That's not normal. For anybody that's seen crypto, for cryptos that are in like the top 10, to see something that happened on Luna is really not normal. So that was quite a crazy day, actually.
Yeah.
Yeah, but then you just withdraw the money. You didn't.
I withdraw some of it, and I will add what I left. I will probably buy more.
Yeah.
You need to find the right one.
Yeah. I like crypto, but crypto is very similar to stocks. You know, I look at it and it the way it moves, the kind of as well the manipulation that goes on. It's the same kind of things.
A market is a market.
Market's a market.
Any kind of market, you will see the same strategies, the same results, the same participant, human behavior, all of that nonsense, smart money, dumb money, all of that, you got it everywhere around the world. As soon as you have buyer and seller, you got a market. So all of those stuff will work. You can play with it as you like. We just, you like to trade crypto for some reason. I don't know. I like to trade stocks.
24 hours, always available. It moves a lot faster than a lot of other assets.
Right.
Said Forex. Forex is a little bit. What do you think of Forex?
Let's not get into that. But although I tried it and it's great.
Yeah.
Yeah, really great.
A market's a market.
It's a market.
Yeah.
Just trade what you like. What I really like on stocks, that also in crypto, we got volume.
Yeah.
On Forex we don't. But
Yeah.
I did some great trade last week on dollar. What was it? Dollar yen or something?
Dollar yen?
Like that.
Yeah, dollar's been strong though, isn't it? It's like you get the strong, you got dollars really strong, and then yen is like super weak. So I don't know what happened with that trade then.
It was good, but day trading. So
in and out.
Shorting it, yeah.
What kind of indicators? Because I know you love the MACD, and I also like MACD and MACD divergence, especially for trend reversal and things like that. When I'm looking for the trade that I was saying, where it goes and takes the liquidity, one thing that I do look is for like a divergence as well to kind of help me out. I love MACD divergence. What kind of indicators do you think people should look at, and like what indicators do you recommend? So
when I started, besides the one shot one kill with the daily chart, for example, for pullbacks, I used 20, 50, 200 EMAs.
20, 50 to
200 EMAs, VWAP, pivot points. That was my main indicators that I worked with, and the MACD. I entered it as well. So I played with those indicators. I tried everything: the RSI, the Bollinger Bands, IDX, momentum, whatever. I tried them all, and to be honest, most of them will work for you if you know how to work them. So the problem is the person who executing them, not the indicator itself. So I don't know, for some reason I'm more connected to the MACD. So it's basically EMAs. For those of you who don't know, MACD is basically two EMAs that the difference between them show you one level of EMA and the 9 EMA, exponential moving average. And I love the divergence with the price, because I understand first, I go to the chart first, right? Because most traders fail on looking at indicators, only indicators. Guys, I watched charts of guys that had like 10 indicators, and the chart is like this small. I don't know how people could do that. I don't know how they could do it. Because it's a waste of you need to understand the price action before you're looking at the indicators. The indicators are just inputs from the
confirmations or confluence and things like that.
So price action first. I understand that it should, these days I will look at a chart, and I will most of the time will be right that there is a diversion in the MACD without looking at the MACD. Just looking at the chart, I understand the movement of the chart. So, but it just gives me a little bit more of confirmation. For example, 3 days ago, I took the Nasdaq. When it was at the bottom, it reached a major support level, had a nice deviation in the MACD on the 4H chart, and mostly in futures I trade. When I trade futures, it's mostly 1H or 4H. And it was perfect. Volume going up at the bottom, everything you need.
It's funny because that picture, I sent Miki actually a picture of some TA that I did like a couple of weeks ago at the very point that he actually took his trade. And I actually, all of the confluence came from where I was looking at was multiple different fib lines, because I love using fibs. That's one strategy I use as well. A lot of retracements back to fib areas. And that area specifically had tons of like macro and micro confluence of fib areas. And I sent that to you, and it went up to about, I think, 9%, and you actually took that trade. You took it
almost from the bottom.
You took it on totally different confluences though.
But it's all the same, A level is a level in all cases. When you have an MACD deviation, you will probably have a RSI deviation as well, or ADX. The Fibonacci retracement reaching support levels as well. You know,
It all comes together. Yeah.
So this is why you want to. You can easily see, you know, your own strategy, and then go to your friend. And this is why you want to trade with others and have a community to work with. Because then, if you would hear and tell me, yeah, this one is also reaching my Fibonacci level, it would
gives you some confidence, and
my confidence, and it will increase your confidence as well. Because I would tell you, yeah, this is a great level, and you would buy it as well, you know.
Yeah, I like being in communities where there's other traders. Not a lot of people understand how much it takes out of you to actually trade and be, you know, trading and understand what's going on. So it's good. With your strategies, did you ever go through a pitfall or a downside where you had multiple losses all at the same time? Like, let's say 5 or 10 times that you were using that strategy, you just had multiple losses all the time throughout.
Yeah, like days?
Yeah, like non-stop, you just were loss.
First, I did have, obviously, I don't see a trader, I don't know a trader that didn't have like consecutive losing
losses.
days.
Yeah.
So yeah, I did. But again, I'm trying to build, when I'm building my strategy of the strategies that I worked with or still working, that I'm trying to build something with a little bit more of success rate, you know, like 50 or 54, something like that. Last year I closed it with 63 or 64% of success rate. So I'm looking for
with that particular strategy, or with on your book,
on all the book,
on all the book,
all the account, but mostly it was that strategy that I worked with. So,
nice.
Yeah, so I'm always aiming for just a tiny bit more of success rate, you know, to give me the position that even if I'm losing, let's say 5 in a row, I know that I'm, you know, statistically will get back on the horse.
Yeah, because that's what I wanted to ask. How do you know when to keep using that strategy? You know, it's like a lot of people as well, and I can say it from me as well, when you do something for a while and then suddenly you see you're just getting lost. How do you know when to, you know, keep going with that, or to cut the strategy?
I mean, the strategy is probably still okay. You just need to understand what's not working right now. So I think we talked about it also, Sol and I, last episode, a little bit about it. You know, you need to understand the market condition.
Yeah.
If you're trading in a volatile market, or if you're trading in a, let's say, an uptrend, right?
Yeah.
The market is an uptrend like 2 months.
Yeah.
Okay. So you're trying to do counter trend and catching the top. You want to get a lot of you know, a lot of trades.
You want to continue with the trend.
Yeah, you want to continue with the trade. So the trend. So understanding that will help you. It's not the strategy is not working, but you need to apply it just a little bit differently. Maybe look for specific stocks to trade those kind of counter trend, for example.
Yeah.
Or switch it and say, okay, we'll drop this counter trend, you know, to 20% of my total, and let's put 50 or 60% to trend following, and so on.
But but how would you know that? You know, like, obviously you don't know what the chart's going to give you. You wake up in the morning, okay, you've had a rough idea with over the last few days where the price is going, but how do you know this is the strategy that I'm gonna use? Or do you just say, I'm not gonna take a trade until price is within my strategy? The reason I ask this is because I've got loads of, like I said, techniques that when I go into the charts, I'm looking for those particular techniques or those particular patterns, and then I'd get into a trade. I wouldn't look for, I'm not getting into a trade until I find actual a strategy, you know, which maybe, I don't know if that's a good or bad thing, but.
So, you know, the thing, the phrase, the trend is your friend.
Yeah.
So it's not really the trend is your friend, but it's actually the full picture of the market is your friend. So first of all, go there. So if you see that the market is trending up, I don't know 1 minute chart, like a big level.
Yeah,
You know.
a daily 4 hour.
Exactly. For example, this time of the year, like literally right now. 4 days ago, Nasdaq reached a major support level, right?
Yeah.
Bouncing up from
Yeah.
it, right? The next pullback that we'll have, it will mostly, probably will continue up again and create a trend to the upside.
Yeah.
So you know that this time, this like a week, 2 weeks ahead, you should look for more upside than the downside, for example.
Yeah.
So stuff like that. So just understanding the bigger picture will help you find the right trade.
So what a good way, if I could put that into something that you could use, is getting your strategy, your techniques, putting them into categories of how they would work in certain market conditions, then only use those or only look for those strategies once you're in that kind of market condition.
Yeah.
Yeah?
Definitely.
What would you say now? A lot of people are screaming bear market, especially in crypto. Everybody's crying about their portfolio all the time.
Yeah.
Which, if you're a trader, it doesn't really matter if it's going up or down. But people are screaming bear market. What kind of strategies do you feel work better in bear markets than in other market conditions? A lot of people say that never buy in a bear market. You're only selling in a bear market. Let's say on retracements, you're always selling. Or
That's stupid.
it wasn't from me that said that. I didn't say that, by the way. Yeah, it's Twitter all the time.
That's stupid. Because, first of all, what type of trader are you? Is it 1 minute chart or 15 or an hour? What type of personality you have? The last 2 days, I made amazing counter trend to the up and the downside on the Nasdaq, on the DAX, on the S&P, whatever. So if you want to, but in general, if let's say you're in a bear market, then momentum will be much better, because when price break a major level, it usually melting down. You know?
What do they say? It's like up the stairs and down the elevator.
Exactly.
It is. That's why I love shorting. Shorting is just so much faster, so much funner. But yeah, okay. And probably not listen to everything that goes on in Twitter. That's probably the Twitter analyst.
You gotta, find what is good for you, because there's a lot of information out there. Find what fits you, and then go with it, and not just too much information is not good as well.
Yeah. Yeah. Last question, what are you using now at the moment that is the go-to strategy at the moment?
Definitely the smart money manipulation, looking for a major downtrend, finding a major support level.
Watch people sell into that level.
Yeah, positive deviation in the MACD, the price action reaching that level, and basically going in.
See, that's the thing. All of these techniques, a lot of people use the same or know the same techniques, but why does this trader, let's say they got the same thing, one trader may not make any money and that other trader makes so much money? It's just, that's it. We're going to have to do the psychology podcast at the next episode on psychology, I think.
All right, yeah, we'll do that.
Because I think that's huge.
Yeah, I mean, it's a lot of it's experience, a lot of it's, being patient. It's a lot of trade management, because some traders will enter the trade and get out of the trade, with a stop loss. But I will actually, let's say, add more where they stopped out, for example. And then it will reverse to the upside, stuff like that. So, yeah.
So if it goes back to your entry, you would always add more in?
Yeah. Or even before that, averaging down.
Yeah. Yeah, I still can't get my head of how to average down properly. I always average down way too much. End up getting a huge position.
We should do a video.
Yeah, of how to average down.
Yeah, with charts and everything.
Yeah.
Let us guys know in the comments if you wanna.
I think that would be good, because I think a lot of people talk about averaging down, but there's nobody that actually explains how to average down correctly. Because you can either get yourself out of shit, or you can blow up your account. It's either you get out of trouble, or you've blown everything with averaging down. But that's it. Yeah, we'll keep that to later on. Anyway, guys, thank you very much for joining us. Like Miki said, check out the rest of the stuff in the rest of the episodes in the podcast. Now we've got a little bit better audio, so you can hear us a little bit better as well. But definitely Spotify, YouTube. Check out Trade the Pool and the Fivers, and we'll see you in the next one. All right.
Bye, guys.